right. Let's see here. Got our goodies up. Hold on a second, guys. All right, there we go. There we go. Let's get my pop-out chat going over here. All right, ladies and gents. Happy Tuesday. Happy Tuesday. I was prepping for an interview, but they actually had to move it. And I just literally found out a couple minutes ago. So that's why I'm popping on a little late again today. Had to get some stuff ready for that, only to find out that they're moving it. I guess the news desk manager, they had a scheduling conflict. So they asked if we could do same time tomorrow. I said, that's totally fine. That'll give me more time with you guys because it was supposed to be in 1 hour from now. So anyway, I'll be able to go for a full hour today now that they've canceled that out, which is obviously right before next stream over on A1 Trading. So anyway, got me for an hour. So we'll take a fresh look at everything and see what we got going on. Just looking at the top setups. We've got some Aussie pairs on the bullish side. Again, looking at the fundamental, looks like we're getting back to some fundamental and sentiment type strength. Okay, as far as these pairs go, Aussie Swiss, Aussie Yen. There's Aussie Kiwi here at the bottom. And down here, looking at Aussie on the quote, as a quote currency, we've got some more Aussie buys down here. Euro Aussie short. And then obviously the pound Aussie short. So Aussie is one of the top currencies at the moment, it looks like. And in all those cases, all 5 of those pairs I just listed, it's given us a signal one way, but the crowd is net positioned the opposite way. So again, we look at this as a contrarian signal. And oil obviously is still up there. It's still going to be one of the main signals we've got, which is obviously influenced as an extra box, if you will, by the geopolitical environment we find ourselves in with the continuation of the Iran campaign. So still haven't had the metals pop on. We do have copper for anybody that trades copper. I don't. But gold and silver, I do believe, are still hanging out around the 4 and 3 mark. So here's gold at a 4, here's silver at a 3. So nothing's changed since yesterday. So it's still there. While I'm over here on the neutral list, I just want to look, see what else we got that might potentially be trying to move on to the list. Okay, so our -4s kind of in waiting or on deck, if you will, to be popping on the list. Nikkei for shorts. And that's about it. Maybe Kiwi dollar, if you get a little bit more dollar strength or Kiwi weakness. It is, and I know I mentioned this. I know we mentioned this last week, but it is pretty cool to see the yen, the currency, individual currencies on here, as if, for futures traders, guys, anybody trading currency futures are going to start liking the Edge Finder now. Being able to see those on here. There's the yen future. I should say the yen index. Okay, Swiss franc index, Kiwi index, among others. All are on here. All of the 8 majors. And as it stands, we do have Canada and the British pound on there for short signals, for bearish signals, guys. So anybody that's a currency future, there you go. Trader Nick's outdone himself, okay, with this addition of the currencies, the individual currencies tab here, and being able to, isolate the currencies, isolate them as an individual. Here you go. There's all your currencies. You don't think this would be valuable information for currency futures traders? Absolutely. In fact, I have a code for a free futures account, one that I won a month ago. And it's just been kind of collecting dust. I asked them if it if there's an expiration date where I want it. And they said, as far as they know, no. So I've just been kind of shelving it. But now that we've got currency indexes on here, all of them, heck yeah, I might dust that off. If I land this job, I'm after, guys, I'm definitely going to get that open. The reason I say wait is because obviously it entails a monthly. There's like the free month. The first month is free as far as the monthly fee that it has. So I don't really care to be jumping into it right now. I'm so busy focused on Forex and CFDs, okay, that I just don't want to. I don't want to do too many things. It's trading. It's good to focus really on as few of assets as possible, to get really good at them. I mean, I've been around long enough to where I can branch out, but I'm just not quite there. I just want to stick with what I'm good at, with what I see. I don't see the futures yet. I still got to learn how the the lingo, okay, the ticks, and all that. I got to learn all that. Now the charts, supply and demand zones, all that remains the same. Okay, it's a high liquid asset, futures instruments. So supply and demand works the same. Okay, fundamentals, sentiment, it all works the same. I mean, I could see this thing one day growing to include all the futures instruments, all the rest of the stocks as far as the stock box goes. See, the stock box has like 100 stocks or something like that. I don't know exactly how many it is. But yeah, he's really going places with this thing, man. When it comes to the Edge Finder, talking about Trader Nick over at A1 Trading, the Edge Finder, the stock box over here, this thing's just getting better and better each and every day. So yeah, there's a lot of bright things ahead for Trader Nick and Company. Because again, guys, I've been trading 12 years, and I've been searching that whole 12 years for something like the Edge Finder, something to put everything in one spot, and it's just awesome to see that. So anyway, continued missiles going off over in the Middle East, guys. Nothing's changed. Nothing's changed yet. Okay, we're still plowing away. A few other countries are plowing away. Let's see what Yahoo Finance has to say about everything. Stocks sell off as new Iran attacks rattle markets. Gold falls as strong dollar offsets Mideast risk premium. Yeah, when it comes to the currencies, I mean, the observation is the Dixie was the only currency index that got a big spike up. Look at that. It's just going up. It's chewing through all these supply zones. It don't even care. Now it was, oh gosh, got a big old hairball on me. As an index, it's back to neutral. It's not on our bullish list as far as the Dixie, the dollar, but it's got some momentum going to the upside. Okay. It's time to update some of these zones over here. Now, these were just minor 4-hour zones. I say minor because when it comes to indexes, I don't really pay as much attention to the lower time frames as I do the daily. Okay. And as you see, what have we done? Exactly what I mentioned last week. Okay, on both streams, I could definitely see the Dixie going to this overhead daily supply. And that's exactly what we've done. So now that we're here, what do we expect? What do we expect, right? Well, a little bit higher prices. We've bounced into an overhead supply. We've hit a 200 EMA. Could definitely be seeing a bounce. Okay, that'd be my expectation. Get some type of bounce, maybe a continuation up after. Wouldn't surprise me to see something like that, and then we just go on to the next supply zone. That's how markets work. Markets typically just bounce off all these major supply zones. Sometimes it's just a minor bounce. Okay, a little bit of a fake out, tricking people that they're going to go the other way and go down like this. Or sometimes it's just a little bit of a bounce, then they regroup and they continue on up to the next overhead supply zone. Okay, same is true in reverse for demand zones. I mean, when price was down here, that's what I was calling. That's what I was expecting. Now, obviously, I said all that before the strike happened, but when we were down in this area, I was looking at this. Hey, we bounced in at one point into a daily and a monthly That's that orange box. Yes, a monthly demand zone. Okay. We had bounced into the daily, monthly confluence here. Got a big spike up. Okay. As a rejection off the daily. Again, strong confluence because you got a daily inside of a higher time frame. In this case, daily, monthly. So we hit the daily, we bounce up, and then in the rejection, we created a new demand zone. Remember this, guys. We created a new daily demand, a new indecision candle followed by a strong gap. Okay. Gap from this wick to this wick. That's our inefficiency in the market. Remember, banks, institutions like to attack inefficiencies because there's typically unfilled orders on the other side to fuel their orders in the opposite direction. So that's exactly what we got. Price left the zone, retraced, came back into the demand, wicked in nicely, and shot off to the upside. So after that, that told me, just observing behavior of this thing, that told me that it probably wants to seek out a higher time frame supply zone to the upside. And that's exactly what it did. Going back to the, get my goodies on here. I mean, we can see this indecision candle clear as day up here. Indecision candle followed by a leg out with not as good. I gotta say, not as good of a gap, but still a swing high point. What's going on, L House? L House. Howdy. Yeah, if you guys have anything you'd like me to check out, let me know. I'm just going through kind of a top-down index analysis at the moment. But yeah, again, dollar, that's where we stand, bouncing into supply. So do I again, I would expect some type of reaction down, followed by a potential push back up. Because remember, with the geopolitics going on right now, with the bombings and everything, there's going to be a flight to safety market wide. Okay. What's our safe havens? Well, the Swiss and the yen are safe haven currencies, but they're not exactly, or as of yesterday, they weren't really acting too much like safe haven currencies. Because look, here's your Japanese index. It went down. Okay. We gapped open to the downside. This, if this is and it still very well could close the gap and continue. Maybe after it bounces into this daily demand down here, maybe that's what it was seeking first. Okay, price bouncing down to this strong daily demand. I mean, look at this demand zone. Look at the gap on this thing. Let me draw the gap for you. Top of the basing candle and we skip the leg out candle and we go to the bottom of the candle after the leg out candle, and there's your gap. That's a big gap, is it not? Okay. Is this a big gap? That's a giant gap. So perhaps that's all that the yen index is doing, is just trying to bounce into demand before liftoff the opposite direction. Okay, there is a daily and a 4-hour demand confluence down here waiting. That's probably what I would expect. Because I kind of tongue in cheek on my shorts video yesterday put, oh my gosh, I'm sorry guys, I'm not even getting my charts up here. Jeez. There we go. I'm just sitting here rattling on, forgetting to put my chart in. Anyway, guys, sorry about that. Back to so again, the yen and the Swiss franc, that's our safe haven currencies, along with the dollar, by the way. A lot of people forget that. Dollar's doing its job. The dollar's spiking as a result of this chaos. Gold, silver, same thing. We'll take a look at gold, silver as, more safe, the metals, the safe havens, the items that thrive on chaos. We'll take a look at that here in a second. But yeah, just to finish up on the Japanese index, I would have expected it not to gap down. I would have expected it to go the opposite way. So perhaps it's just simply seeking out this demand down here. This was what I was pointing out when I thought my chart was up. So, but yeah, we have a big gap. So basing, we got our leg out candle, which is basically our inefficiency because the candle after, okay, that candle stayed way up there. So that's a inefficiency, big giant inefficiency right there. And there's our gap. Big gap. That's a giant gap. So that tells me there's definitely going to be some type of bounces down here. And also you got this blue dashed line, in which, if, as always, guys, if we look to the left, it's going to be a former support or resistance line. In this case, a former support. Okay, this is top down. When you understand the indices, when you understand the overall look of the indices, it'll help you to understand any of the pairs, any of the Forex pairs involving that index. So in this case, the Japanese yen, right? If I'm trading dollar yen, or if I'm trading euro yen, or if I'm trading pound yen, or whatever, it's a good idea that I take a look and see what the overall index is doing. In this case, I see clear as day, former support going right through the bottom, basically the bottom, or the proximal line of the daily demand zone with a strong gap. So that's good information to know whenever, if dollar yen, or if I should say, well, really any of the other yen pairs bounce into a zone at the same time. I like that. That's a confluence of zones. When I have my index zone bouncing in, when I have indexes prices bouncing into a zone at the same time, I'm looking to possibly buy or sell in a supplier demand zone with that paired, or with that currency paired. It's confluence. It's good confluence. The whole point of trading is to get as many odds enhancers in our favor as possible before we pull the trigger on a trade, right? Maybe for some of you, it's moving average crossover. Maybe it's your RSI bouncing to a 70 or 30 level. I use 80-20 just because I look for the extreme overbought and oversold levels. Maybe some of you use VWAP. I use VWAP. I like VWAP. Or an oscillator. Okay. Reason to buy or sell something, guys. To me, the reason to buy or sell something should be price bounced into a zone, a supplier demand zone. So anyway, that's the GXD. What about the SXY, which is the sexy? I call it the sexy, guys. It's the Swiss. That's the Swiss index. See, it's going down as well. Again, it's not being very safe haven, if you ask me. Yeah, we still got a ways to go for a demand zone bounce on the sexy. Okay. But obviously the Dixie, which is the third safe haven currency, it's spiking up nicely. It's doing its job. What about the VIX? What's the VIX doing today? Okay. So yeah, this is how we fared yesterday, guys. I mean, we got that spike right here. Let me go to an hourly chart. Monday. Yeah, here we go. So this was Friday close. And then on the VIX, remember, we bounced all the way from a 20 area to a 25. So that's a big spike. Again, that's a lot of scared market reaction to the over the weekend events. We bounced, we gapped up, but then we retraced all that. Now we've gapped back up again. Okay? Again, continued campaign. We're probably going to get a lot of this choppiness on the VIX, talking about the fear gauge. So there we go. We're back up again, gapped up, went higher, retracing. So it's going to be all over the place, guys. That's your fear gauge, the VIX. Muchir Kelvin, good morning. Howdy. If you guys have anything you'd like me to bump the top of the list, index, asset wise to look at charts or anything, let me know. I'm just going through kind of an overall top-down analysis, looking at the indices right now. But just looking at the more risk-off currencies, or I should say risk-on currencies, this is a little more understandable because you got Aussie down, you got pound down. There's your KEXI, your Canada index. It's down, but not by much. Euro index is down. Okay, it's just chewing through some of these demand zones, which makes sense because geopolitics is like a high-impact red folder event on crack, right? Imagine 5 or 6 NFP reports, the strength of that. That's what happens when you have geopolitical shocks in the system, black swan events, right? It's not going to care about supplier demand zones. It's not going to care about a lot of things. It's not going to care about anybody's trading strategy, right? It's because at that point, it's all fear. It's all about fear. Okay? Fear has entered the market when you start seeing big, wild swings that just totally, for lack of better words, shit can our trading strategy, right? So yeah, we've already looked at that. And then lastly, the New Zealand currency index, okay, down. So all the indices, with the exception of the Dixie, are down. And then, of course, the Dixie is up. What about gold? Because remember, gold thrives on chaos. So does silver, but silver is a little, I mean, it still thrives on chaos, but it's got a little more uses that sways its price because of its value in industry and building things. So let's look. Okay, gold looks like it's retracing. So there we go. We had a gap up on Sunday off the initial fears. And then what have we done? We've rolled over, completely rolled over. I like this. Now, there's not a signal to buy. And see, again, it doesn't even care about zones right now. So when these things started respecting zones, that's when I'll be interested in getting into trade. Guys, I didn't get into trade yesterday. Okay. I didn't get into trade. Didn't want to. I mean, I watched. I had a couple things that were close, but again, we're still like everybody's still running around with like chickens with their heads cut off. And as you can see, I've just deleted one demand zone that didn't care. It didn't work. Chewed through another one. Now I wasn't worried about this one, or I wasn't excited about this because it was so skinny and thin. But also, guys, we don't even have a bullish reason to buy this when we're looking at fundamentals and sentiment. So when I start seeing demand zones and supply zones get respected a little bit, that's when I'll start pulling the trigger. And just looking at and then let's see, let's go to and just looking at kind of like lines in the sand, looking at this red line. Okay, I like to split the difference on a higher time frame like this, like a daily. Split the difference between a gap or a group gap for potential stop losses, just to have an understanding of stuff. So like if I look right here, this gap, see that gap right there? This is on a daily. So we're talking about the top of this wick to and skipping this inefficient candle and then going to the bottom of that wick. Okay. That right there is a gap. So it's also a line in the sand or potential stop loss prices for continuations in the move. Now we've closed the gap. Okay, we've closed that gap. And of course, I just put a red line out in the middle, kind of splitting the difference of that gap. So basically, long story short, the idea is if I were to be wanting to buy to continue in this area on a smaller time frame, I'd be wanting to find a demand zone that is above that line, because that would be the stop out line. As you can see, we've closed it. So now we're going the opposite direction. So typically when that happens, we would look for a close today, and then whatever candle opens up tomorrow for the next intraday session, then we would be looking to go on the opposite side. Okay, but I wouldn't be doing that because of my moving averages. So yeah, that might be a little too advanced. I don't want to get into that. That might be a little too much right now. I'll just stick with the simple stuff for now. So anyway, I say that all to say, not interested in buys at the moment or sells, because it's not even on the list. Zambezi, what's going on? Top setups. Let's take a look at some of these. Well, first of all, I want to look at the indices, the indices strength, index strength. So let's go to macro scanners and surprise index, because if we had a shuffle yesterday, guys, okay, some of these currency indexes, they moved around on us. Even since I went to bed last night, there we go. Euro is up to 60%. So 60% of high impact events have exceeded expectations. We take out the neutral ones. So if something met expectations on our high impact events over here, then it cancels itself out. We ignore it. We only care about the ones that come out green or red. That's how these percentages are figured. Okay, as always, if we go over here, so like to euro as the example. Okay, this is currently the strongest currency when it comes to the fundamentals. 60%. It's exceeded expectations on 60% of its high impact events. So let's look at this. You see two boxes that are neutrals: the GDP report, the manufacturing PMI. Those met expectations right on the dot. So it was priced in, right? If it's priced in, we don't care about it. We just skip it. So it cancels itself out. So forget we see those right now. Of the items that we have an actual result that came out bullish or bearish, meaning exceeded expectations or missed expectations, you see right there, we've got 5 total boxes, but 3 of them exceeded expectations. Okay, talking about the CPI, the PPI, the unemployment rate. Those exceeded expectations. So that's 3 out of 5. And what's 3 divided by 5? 60%. That's the number. That's the important number here, guys. Okay. Now we're only talking a difference of 1, but 1 is important when we're talking about, hey, are we net bullish or a net bearish on an individual currency? Because the whole idea is we want to match a strong currency with a weak currency. And right now, what do we got as far as weak? Ooh, Swiss just moved yesterday, guys. Swiss franc just moved to 0%. And then you got the British pound right behind it. Okay. Let's go look at the Swiss franc. Why is the Swiss at 0? Well, that's why, because yesterday we had manufacturing PMI number come out bearish, and you also had the retail sales number come out bearish. So there's not a single box on here that exceeded expectations on a report. You had one neutral with the inflation numbers for Switzerland. Other than that, everything else is missed. That's what you call an ugly. Damn it, did my shit move off again? Get that pop up for you guys real quick. Okay. So there you go, guys. Talk about Switzerland. Talking about the Swiss franc. Nothing but red on there. Again, you got one neutral box with the inflation numbers where they met expectations. So that cancels itself out. We don't even factor it into our formula. But that's 6 out of 6 bearish. So that's a 0%. Everything's missing expectations. That's economic underperformance. And when you have economic underperformance in a currency, overall, that's a weak currency. So you want to be selling that currency when possible. Match it with a strong currency and buy the opposite. Looking at the dollar while we're over here. Okay, the last 7 calendar days, something's up. We haven't made it to March 6th yet. I don't know what happened there. I wonder if that should. I don't even know. Have we gone into the future? Today is the 3rd, right? That says March 6th. I'll have to let them know about that. Something might have happened. Wage growth. What was wage growth? That definitely wasn't. Well, anyway, yeah, something's clearly off on that, but still everything remains the same. Okay, most recent report we did get on the wage growth side was bearish. So yeah, I don't know what's going on, but either way, the percentages are right because that's exactly what it was when I went to bed last night. 53%. So this is basically neutral, if you ask me. Okay, 53.85%. I mean, that's pretty neutral. That's not screaming buy me or sell me. It's just kind of in the middle. Okay, you got about half and half boxes for bearish and bullish. So when a currency is neutral, it just doesn't get as exciting to me. Let's go back to the index. So again, Swiss franc, number 1 currency to sell, followed by the British pound because it's under 40%. Remember that 40 to 60% is just kind of neutral to me. If it's under 40, okay, that's getting me up out of bed, excited to sell it, excited to short it. If it's above 60% or 60% or above, then that's a little more exciting to buy. So we got a lot of neutral currencies, don't we? Okay, that's a lot of neutral currencies. So just not as exciting right now. Maybe times like this is where we'd want to be going and looking at other potential assets. If somebody's a multi-asset trader, stock trader, okay, it's just a little too neutral. Now, I'm not saying there's not items to buy and sell in currency, and I'm just saying it'd be nice to start getting some stuff, get a little stronger of a signal one way or the other. Sorry, guys. Excuse me 1 second. All right. Anyway, guys. So let's just go take a look at some of these. Let's see. As far as high impact events, today is the 3rd. So this evening, I should say, this evening here in the States, we do have Australia's gross domestic product report coming out. They're projected to have a pretty good boost, okay, from 0.4% to 0.7%. So not, pretty close to doubling up their previous results. So that would be a potential bullish, obviously a bullish thing for the pound, or excuse me, for the Aussie dollar, guys. If it's 0.7, that would be priced in. If it's 0.8, 0.9 or higher, okay, that would be a surprise to the upside, meaning an extra boost to the Aussie dollar to the upside. If we're at 0.6, 0.5 or lower, that would be bearish. That would hurt the Australian dollar. Okay, but 0.7 would be priced in because that's what the economist already predicted. So if it hits 0.7 right on the head, you might get a little bit of up and down, but then at some point, it's probably just going to continue where it was already going. Okay, anytime you have something priced in like that. So we'll see. That's 6:30 my time. That's Central Standard Time. And looks like we got a budget release for the British pound. Yeah, that'd probably be something to look at off screen. More boring stuff. Boring stuff that's important. Kind of like the beige book. If you guys have ever looked at the beige book from the US dollar, it's hundreds and hundreds of pages of their whole entire economic plan for the year, for years beyond. So I like to take that report and run it through Grok and just say, hey, simplify this, summarize this, give me the bottom line of what this damn thing is telling me. Zambezi, yeah, that's what I was saying at the start. So I was busy working on stuff to get ready for it, and they kind of told me last minute that they had to push it to tomorrow. So I've actually got that tomorrow at 8 o'clock my time. Yeah, that's why I was hopping on late, was because I was trying to get stuff in order for it. But anyway, I'm actually fine with that. I could use another day to prep for it. Yeah, I found the shaver. Found a shaver. It was time. It was getting a little scraggly. Gotta keep it. Yeah, Zambezi, and that was the other thing. I didn't even. I totally forgot to create the live stream for today until like 15 minutes before I started. So that was on me. That's why you didn't get the notification. I usually will do it as soon as I finish with you guys. I'll immediately go and create the stream link for the next day, but I just got sidetracked yesterday. Yeah, yesterday I was busy too, just prepping and doing things. So yeah, I'll be back to my normal schedule, hopefully after this interview tomorrow, to where I'm not late and missing stuff. So anyway, just looking at some of these other lighter impact events. Okay, Euro CPI. Okay, so the Euro inflation numbers. These are the flash numbers. So as always, guys, when you see a flash estimate or a flash report, that's typically the prelude, if you will, to the final report, to the main reports. That usually comes out about a week to 10 days later. Okay. This one here. Okay, so this one's 2 weeks. 2 weeks apart. So this is the preview to the main data for the Eurozone. And this is the same for all the other currencies whenever you see flash. Typically about a week to 10 days, or in this case, 2 weeks apart. Okay, again, that's the final, but the flash reports are still important because it's obviously given a preview of what the final report's going to look at, right? So it's important. Now, obviously, it works a little different for some of these other countries, but that's good. I mean, that's a good sign. Good sign for the currency right there. Okay. Now, it's higher inflation, so it's obviously not good for the citizens of the Eurozone when they go to the pump, when they buy their groceries, when they pay whatever, their monthly bills and such, weekly bills. Okay, that's more money. Obviously, mortgage rates, things of that nature. but it is good for the currency. And that would also be obviously bad for the DAX, guys. I mean, one of the main euro stock indexes, right? It'd be bearish for the DAX, higher inflation, right? So anyway, that's the eurozone. Nothing else to look at today. Tomorrow, Wednesday, hump day. We do have our non-farm, okay, non-farm employment change, as well as the services PMI. Let's get rid of all the yellow crap for a minute. I just want to look at red folder events for the rest of the week. Yeah, that's it, guys. That's what we're looking at here. So Wednesday, again, that's our non-farm employment change number. Okay, so it's a little different than the payroll report, guys, which is the main non-farm report. Okay, this one gets often confused with the main one, the one that everybody runs around like a chicken with their head cut off about. Okay. This is employment change, so this is a little different. And then obviously Thursday, our weekly unemployment claims here in the States. Friday is a pretty decent sized day for the dollar. And all these Friday reports happen right at 1 hour to go before the Friday market open, Friday stock market. Average hourly earnings, core retail sales, non-farm. Okay, there you go. So remember, we were just looking at the ADP specific version up here for Wednesday. But the main one, the exciting one, is Friday. And that's typically when the report comes out. Friday. It's typically Fridays. This is the big one. So remember the previous reading, guys, this is the biggest one of the week. The previous report we got was 130,000 against an estimation of 60-something thousand. If you guys remember this, let's go. There we go. So here was our previous reading where we had an estimate of 66,000. That's new jobs hitting the market. That's new jobs here in the States. Estimated at 66,000, but we doubled it, effectively doubled it. 612, okay. Doubling would have been 132,000, but we got 130,000. So 59.98%. Or I should say, actually the other way around. 199.98%, if that makes sense. Guys, I don't do math. I do geometry. So forgive me for that. But that was a big addition. So if we're coming all the way back down to earth at around 60,000, does that mean we'll have a big, heavy revision? Possibly. Let's turn on our revisions. Yeah, so we don't know the revisions from this last big number that we got. We don't know that until the number comes out on Friday. It would be nice to get that revision number early. Even a day early would be awesome, but no, they released the revision. Okay, they do the revision on the same day that they release the current batch of numbers. So by design, they want to keep us on our toes. And then, retail sales and then unemployment rate to round out the week. So that's the high impact items. But today, all we care about high impact wise is the GDP report this evening for the Aussie dollar. That's it. That's really the main thing. Okay, we already saw that we had a good euro CPI number. So the rest of the day, as far as I'm concerned, is all supply and demand. And then obviously geopolitics, guys. It's a good day to keep an eye. If you guys have a financial juice type of a website to keep all your news in check, or perhaps you have FX Street. FX Street is free. Financial Juice, there is a free version, but obviously the paid version gives you a heck of a lot more. But FX Street, this has always been my go-to, guys. Just go here, you go to the news, and then you go to Forex News. This has always been my go-to news source for, all things currency. And the reason I like FX Street is because they'll isolate the different assets and write an article about it. So like dollar yen, there you go. Okay, talking about the Aussie dollar itself, hawkish RBA. There's gold specific. Okay, here's the US dollar, which is a safe haven, talking about that. Euro dollar, Bank of England specific article there. WTI jumps over 6% to top $75. Yeah, we knew that was coming. Hell, that shit could that could still go to 80, 90 bucks or more. It could go to 100. Who the hell knows? If it's a sustained war, okay, they did say 4 to 5 weeks was the projection for getting all this done. But who knows? Who knows? So anyway, yeah, FX Street, guys. All right, let's look at some charts. Let's look at some charts. We've got about 20 minutes. Let me see what we got in the chat real quick. A PA? What do you mean PA, Zambezi? What does that mean? I was looking for some extra. PA. Yeah, let me know what PA is. I don't know what that is. Let's look at these. Let's look at these pairs, guys. We've been in 40 minutes, and I'm blabbering away. Aussie Swiss, Aussie Yen. Okay, you're looking at the footsie. Yeah, let's take a look. Let's look at that first. Let's go look at the footsie. Okay, big drop. We dropped into a demand. Okay, demand zone. There's your daily. At this point, I can delete these other ones that it cut through like a hot knife through butter. Yeah. What's going on with my delete button? Oh, there we go. So looking at this daily, look at this. We bounced into a daily 4-hour confluence, and we're getting a bounce. Woo-hoo-hoo! And you're looking at 10,408. 10,408. You're looking down here. Okay. $10,408, that green line. All right. So on a 4-hour, just looking at your area there. Here, let's do this. So if I tried looking at this on a 4-hour chart, I'd be looking at this red candle, but that wick has already touched it. So to me personally, for the way I look at charts, I can't utilize that as a 4-hour demand zone. So I'd have to go smaller. Okay, so 2-hour kind of brings it into picture a little better. I mean, I like it. I love where you're at. Just to say at the outset here, I like this. Okay, looking at a 2-hour demand. Gosh, this mouse sucks. I got to fix this mouse. It just seems like everything I do on my brand new computer over here, I fly through charts and everything. I just don't have a webcam to where I can do my streaming from my main trading computer. So that's why I use my laptop, which also has a monitor over here. And for some reason, the mouse is just like 10 times slower than my brand new mouse. So I got to figure that part out. I don't know why because it just seems like it takes forever for stuff to scroll and zoom and use the wheel, the finger wheel and all that. So I don't know. I just felt like complaining for the moment. See, like right here, this is all going so slow. I got to figure it out. It's annoying the hell out of me. Even zooming in, like this should be going a hell of a lot faster, but it's going so damn slow. But yeah, just looking at it on a 1-hour. So yeah, that's a decent looking zone. Yeah, I like it. I mean, I personally, if I were a betting man, I'd be already probably looking at getting in this trade in this confluence above us, where we're at. But I can't hate that. I can't hate where you're at because you're at the true origin of this overall strong move up. Only reason I favor this area is because I actually have a true daily demand down here. Let me see if this, let me zoom in. Of course, it's going to take forever. God dang it. Okay, I'm looking at this candle here. So let's think about this. So your price is down here, which I don't disagree with. I like it. I just personally, let me see if this might make sense to you. You know, so this is the origin of a strong move up where you're at. But let me move this out of the way. Let me move all these out of the way for a second. Okay. So we've got choices here. We've got this as a demand zone, which is what I'm looking at because it has a gap from here to here. This is our acceleration gap, right? So this is our inefficiency in the market. And that's why That's why I wrap my rectangle, my daily demand right there is because of the gap. Now, where you're at, it's also in a daily demand, but the problem is the leg out candle right here. It didn't go that far, and it did not give me a gap. See the top of the wick here and how it overlaps this wick here. So the top of this wick overlaps this wick if we just look straight horizontally. When I see that, that tells me that's an efficient market on that time frame. So I just personally don't like the picture as much down here as I do right here because of the gap. Does that make sense? Oh, personal assistant. Oh, yeah, I need a personal assistant. I really do. Zambezi. But yeah, that's why I'm personally looking at this as the demand. And then obviously when we drop it to a 4-hour, then that's where we see our 4-hour demand right here, which also has a gap. Okay, the gap would look obviously like this. Okay, there's our gap on the 4-hour chart. But in the zone I'm looking at and the zone you're looking at, the good thing is we've got very strong volume spread analysis activity. See that red candle? There you go. That's good. That's a lot of institutional look to it. So I like both zones. I just like mine a little higher just because it has the gaps. It's showing the inefficiency in the market. So hopefully that makes sense. But no, you got a good spot too. So, and then FTSE, yeah, it just would be nice if it gave us a bullish signal. That's the only thing that, as far as I'm concerned, we're really lacking, whether we use my zone or your zone, because yeah, see, it's given us a slight negative on the edge finder score and -3 on the technicals. So -3 on the technicals, 0 on the sentiment, but a +2 on the fundamentals. So fundamentally, it looks good. Okay. Sentiment wise, it's just kind of canceling everything out. No real strong bullish or bearish bias. But then for the technicals, it's basically about the moving average crossovers that Nick has programmed. And I don't remember the exact moving average crossovers that he has in there. Let me do this. I'll have to look that up because I know I've studied all of it in the past. I just can't remember which numbers it is. Let me add in the neutrals real quick because I'm curious to see. Just again looking at the FTSE. Where are you at, FTSE? You're right under my nose. There goes my slow ass scrolling again. God, it's so annoying. Okay. So see, 0's for the sentiment analysis. So 0 for COT, 0 for contrarian signals. So 0 help at all. -1 though on the technicals, and -2 on the seasonality. Okay. So UK 100 over the past 10 years on average is typically bearish for the month of March. Because remember, we're in a new month now. Okay, this is where seasonality at the start of every month, this is where it's good to isolate just the seasonality scores since it's a new month. Just to say, hey, okay, what I was just looking at the other day when it was the previous month, is it the same now or is the script flipped? So again, seasonality is good. It's powerful. It's the overall average. If we're overall going down an asset in the month of March, historically over the last 10 years on average, it's just one piece of the puzzle. So right now, it's just unfortunately not helping us for the bullish side, just like trend isn't because of the moving average crossover that he has programmed. So anyway, yeah, there I go, getting off on tangents again, but no, good stuff. Aussie Swiss, Aussie yen, guys. This is our number one bullish asset. Now we have bounced into this this daily supply. Okay, that's that big yellow box. So automatically, I'm going to be personally waiting for another high time frame zone at the bottom. In this case, we've got basically got one right here. Okay, this is a 4-hour. It's a 4-hour zone I just like to picture better on a smaller time frame, 2 hour. Okay, on the 2 hour, it gives me a better looking gap from here to here. It's not the greatest gap, gotta admit, but it is a gap nevertheless. I say it all the time. Gaps are powerful. Gaps are inefficiencies in the market. Think of a gap as the warm butter, and then think of the price as the hot knife. Okay. The gap is the warm butter, and the price is the knife. So I expect to see price water through gaps. Okay. There's clearly nothing holding it back because it's able to pass through without a return. So we have to go through the warm butter to get to the goods, to get to the unfilled orders for that potential buy up. Now that's a hot take too, because you get a lot of people that swear up and down about buying gaps or selling in gaps, right? They use the gap itself as the supply demand, right? Look, I think it works better on the smaller time frames when people do that because that's where the retail traders are playing. You don't have a banker with $100 million in his account typically trading on a 5-minute chart or a 1-minute chart scalping, guys. They're typically doing the higher time frame trades. I would say 4 hour at minimum, but daily and weekly. So yeah, it's just there's a lot of hot takes in trading, right? Some people say support resistance lines don't work. Some people say supply and demand zones don't work. Some people say oscillators don't work. Some people say indicators, VWAP. Everything in trading, indicator, or oscillator, or strategy-wise, has been created because somebody somehow made money with it. Think about it that way. Now, I'm not saying it's all good, but some people claim they made money with everything that's in existence. I mean, if we take a look at indicators, every single one of these indicators that I have saved, which I barely use, but just a few of them, and all the ones that are not mentioned, okay, somebody's traded it and used it and made money with it. Otherwise, it wouldn't be a thing. So again, trading is all about learning from people, but then figuring out what makes you tick, figuring out how you see the market. Sometimes it is an indicator to help you see the zone, see the setups better. That's fine. Filter. Remember, indicators act as filters. An indicator by itself should not be a reason to get in a trade. The indicator is supposed to be there to filter out bad trades, right? Now, I use supply and demand zones. I use the candles themselves when you stop and think about it. The candle itself, the naked chart, if all else failed and I had nothing, had no indicators or anything, just give me a naked chart. That's all I need. Because I'm just looking for the zones. The indicators, though, talking about the moving averages I look at, obviously the RSI, okay, the VWAP when I periodically pull it out, Fibonacci, okay, if I'm looking at some zones there, all that acts as a filter. Those keep me out of trades. Indicators don't help me get into a trade. They help keep me out of trades. I think far too many people look at indicators as their golden method, their reasoning to get into a trade. Does that make sense? Right on, Zambezi. We'll see you there, man. So yeah, that's to me, that's what an indicator should be, a filter to keep you out of trades. So if I look at these filters, if I look at these odds enhancers and they're not painting a picture against what I'm looking at, against the narrative, hey, I enter the trade. Right? Filters. They're filters. That's all they are. That's all indicators should be, in my opinion, is filters. Find a base, find a structural reason to get in or out of a trade, but just use the indicators as filters. So anyway, Aussie Swiss, taking a look over here. Again, guys, alerts down here. We've bounced into this higher time frame supply. So I would expect a retracement down to a demand zone, obviously. So that's what I'm looking at here. Might keep an eye on that price range. Let's go back to a 4 hour real quick. There is another 4 hour demand a lot further down, but might take a stab right here. We can get down to this this area here. Pretty decent volume in that area. What about my move? Oh, where's my? I don't even have my moving averages up. Here we go. Okay, so there's our 200. So our 200 is above the demand. That's what I like to see, guys. I like to see my 200 exponential moving average. I like to see my 50 above my 200. Number one, that's what I have. That's the 50, the light blue, and then the dark blue is 200. So that's step one. Step two is price needs to pierce the 200. Okay, well, it has no choice because if it comes down, it's got to pierce the 200 in order to come down to my demand zone. Step three is my RSI. Is it below 20? Looks like it is. We're already sitting at 14. That's very majorly oversold, guys. So I'm just asking it to sell off some more, which by the time it gets down here, it's going to be so oversold it won't know what to do with itself. So again, it's a filter. That's not telling me to get in. That's just not telling me not to trade this demand zone. So Aussie Swiss, top of the list. Aussie yen, dollar yen, euro pound. Let's go look at a couple of these. Aussie yen. See, Aussie yen is in an oversold as well. 50 is above 20. 8 is above 21 over here on the daily chart for the EMA. Okay, that's the light red and the dark red. I should say dark red and then light red. Dark red is ahead. Dark red is 8. That is confirming with Edge Finder over here that with my +7. That's confirming I have permission to look for a place to time a trade. So looking over here at the left chart, got a lot of demand zones underneath. I need to actually clean this one up. We're still in that big impulse leg up from the market open on Sunday. So in its wake, it created, let's do this, guys. Let's move this all over here. Okay, in its wake, it created a couple demand zones. So there's a demand zone right there. I do believe these looked a little better on the 30-minute. Yeah. Okay, 30-minute. We got 2 basing candles. That's pretty nice. In fact, I like this current zone better because if you look at this demand down here, look at the volume underneath it. Okay, not a whole lot of activity until obviously the next candle where it started to grow. But then by the time we got to this demand zone where we currently are, what's the VSA candle look like? It's yellow at the bottom. So there you go, guys. I'm going to get up out of here in about a minute. When I do, I'm going to make a decision if I want to buy this because I typically want to find a green bar. Well, I'll end on this. So I typically want to get a green bar close in the opposite direction in the direction I want to go to before I buy the breakout of that. But this case, what have we got underneath? We got a big wick inside of a demand zone. It's going to close well above the 50% line of this candle, the range of this candle. So I'm going to probably buy the breakout of this candle, guys. Everything else is meeting my expectations. We got a trade on our hands. So I'll probably get in this. And yeah, by the time tomorrow rolls around, I'll let you know. Maybe even when we get on to Trader Nick's stream here shortly. I'll be on here in about an hour and a half, I think, something like that. So anyway, guys, that's it for now. Do tune in to A1 Trading, their stream coming up. Okay, as always, you can go over here. If you don't know this yet, most of you do. Trader Nick. Okay, this is going to be the next stream at Trader Nick on YouTube. I'll be on here a little bit later. Let's see, what time am I on here today? Let's go take a quick look at the live stream schedule. And here's the schedule, guys. A1trading.com. At the very top, you see the live stream tab here. You can come down and see. Okay, so 9:15 my time, 10:15 a.m. Eastern Standard Time. For me, it's an hour behind. But that's when I'll be on. So, ladies and gents, have a good day. We'll talk to you tomorrow. Peace out.